Next week is going to be another very interesting week when it comes to volatility in the stock market. Given what we had last week, man, I believe it's still going to be very, very choppy, like those big swings between the lows and the highs. Just because not only we still have earnings for some of the major companies on the S&P 500, even though the biggest are kind of behind us, but we're still going to have all eyes into inflation with CPI data, consumer price index, but also with the PPI, production price index, over the producer price index, and also what is happening with the rates on the bond sector. Because anytime these bonds, or at least the yields, go up, well, markets are like, man, we don't like this. So let's see on some of the 5 key things are going to potentially move the market next week. Now, coming up next week, we're going to still have inflation in April, consumer sentiment, and earnings from Disney, just to cite those, that one. But the key takeaways here are earnings. We have some of these measures. We have Simon Property Group, really, really interesting because they're going to give us at least what they think, is going to lead to the next real estate market, at least as, these next coming months. Tyson Foods, again, on inflation and the, consumer as a retailer, price sentiment. Sony, Electronic Arts, Coinbase, Fox, Toyota, Disney, Alibaba, WeWork, and Honda, among others. Now, on the inflation thing, this is to me the biggest one. The latest inflation figures tracking the month of April will be released, so the CPI, and the PPI, Producer Price Index, on Wednesday, on Thursday, respectively. So Wednesday we have the CPI data, which I believe is expected to be around 8.1%, and we have the PPI on Thursday. And then we do have the preliminary May reading for the University of Michigan's Consumer Sentiment Index that will be released on Friday. Now, I don't want to touch too much on earnings, because it doesn't matter if earnings are good or bad in this current market, stocks get slashed. So let's focus on what the market will be focusing on, the consumer price index. All right. Now, this index is 40 years high. And because it's 40 years high, a lot of people in the market are already shifting the way they're going to let their money invested, or completely getting the money out of the table, and putting it into cash to kind of wait and see how things go. Now, there are two people here, or two camps. The first camp here on inflation is still going to remain high. And I tend to believe that just because of, where oil and other commodities and, supply chain issues, and especially the war in Ukraine. So much supply chain issues are we're smoothing a little bit. But as far as, Russia and Ukraine conflict and commodities go, these two, I believe, is going to still continue to make inflation be sticky. Now, you have the other camp thinking that inflation is already at the peak, and then we might have, instead of 8%, we might have maybe 7%, which I believe if it's the case, then the market are going to be relieved, because it means that the Federal Reserve doesn't have to be that much aggressive into increasing interest rates. All right. Now, something else I want to put into perspective here is one tweet from BlackRock, and they believe that inflation is likely to come back down because it already peaked back in March and February, and it should decline to 4%. I mean, it should decline to 3% by the end of the year 2022. All right. Now, that being said, if the reports come and remains below 8%, then boom, people are going to be relieved. All right, based on what I just mentioned earlier. But if it doesn't, then I think it's going to be another red week in the market. Now, looking at the futures, looking at the futures for the US market, it's already it doesn't look good. It doesn't look good, people. I don't know what the heck is this. Let me refresh this page because, yeah. So futures, we are already looking at 200% down for the Dow Jones, 0.75% for the S&P, and almost, 0.83% for the Nasdaq. Yeah, and crude oil is still kind of hovering around that $110 per barrel. So, yeah, usually it doesn't mean that much so early, but if it starts this bad, then it means the actual trading session can be bad, especially when crypto, it's also kind of flattish on the red. But Bitcoin down to $35, I mean below $35 a coin, yeah, it's pretty much a bearish picture as far as future for the next trading session on Monday night look. But again, whatever is happening within the future or the after hour or pre-market session doesn't usually transpire into what the actual trading session will be because of low volumes within this period. And whenever the market opens, then you have everybody kind of balancing the bulls and the bears. So I don't expect before CPI to see green on the market, but after CPI maybe relief, and definitely before June, I don't think the market will still be kind of clear in direction. So because of that, I may still hold on a little bit of onto my cash. And as I mentioned to you earlier, stop buying stock at least to see clearly where this go.